I started off investing while learning from, fundamental analysts like Ben Graham and Buffett. And so far, um, based on my own analysis of certain stocks and the efficient market hypothesis and all the economic theories that I learned, I have been able to generate quite decent returns for myself. However, I think that I'm lacking in some ways. I think that what I have right now, the knowledge that I possess, is currently just half of the pictures. Although fundamental analysis gave me very good insights into how economies work, how markets work, how government policies affect prices, but I seem to have a hard time timing those decisions, and that is why I am more inclined to learn technical analysis recently. I recently bought a book called Methods of a Wall Street Master by Victor Spirandio. The only reason I bought this book was because it was recommended on Wiley's Investment, which is a site that recommends investment books to read. And because Paul Tudor Jones actually gave a review on the book, a short little comment on it, and saying that it was good. Paul Tudor Jones is one of the investors that I aspire, so I thought I'd give it a shot. And after reading the first half of the book, I am convinced that I really need to improve on my technical analysis. Like, for a personal example, after Facebook dropped to 176 late July, after disappointing earnings and user growth, I did some fundamental analysis and found that the PE ratio, the current PE ratio for Facebook at that time was lower compared to the historical PE ratio, the average historical PE ratio. And plenty of other things like they haven't fully monetized Instagram, WhatsApp. So I saw that at that time as a very cheap business at an attractive price to buy. However, if I had known the mood of the market at that time towards Facebook stock, I would might have done something different. Facebook closed at 163 Friday, and that brings my loss on the stock to 7%. And if I had known at least a little bit of technical analysis, I would have been able to anticipate this drop, maybe take advantage of it, or maybe move my money somewhere else. And it's just more efficient that way if I did that. However, I didn't. So I think, yeah, I'll give technical analysis a shot. But again, this is a warning since investing can be risky and you stand to lose money every time you buy or sell. That's the risk right there. If you're not interested in the markets, in economics, if you're not willing to put forward the time into learning all these principles, I don't recommend that you try technical analysis. I think that you need to find a good financial advisor that can help you, set up a proper asset allocation for your risk tolerance and what you want to achieve in the future, so that even average returns such as 8 to 12% annualized returns, depending on what kind of risk tolerance that you want, can be able to help you reach your financial and personal goals. So yeah, that's my little take this week. If you guys have any questions regarding again what I'm doing in general, like what kind of book, who is Victor Sperando, who's Paul Tudor Jones, any questions whatsoever regarding the topics of finance, markets, economics, I'll try to answer them to the best of my abilities. But if not, thanks for watching, guys.